In this video, I'm going to show you exactly how we use the in-the-money covered call to generate some decent premium with some downside protection. Even in this market, we can make money. We just have to run the numbers, and that's exactly what I did here for the members. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about that in the money covered call, and we use a 3x leverage. We love to use this one. I'm going to show you some of the incredible trades we made this year, but I'll tell you what, last year we were the king of the in the money covered call. I love the downside protection. I love being paid all that intrinsic value, and the stock can actually fall and I could still have my shares taken away, creating cash flow that's incredible because we're using a 3x leverage ETF to the index, the Russell 2000. We're talking about TNA. I'm going to show you that trade. This trade right here I did for the members today, and we sent this out in this market where everyone is afraid to trade. I'll tell you, there's some incredible trades out there waiting for you. Well, if you're a member, you get to see all of mine, and we've been doing about 4 or 5 of them over the past 2 days. I am not going to sit on my hands anymore. This market found a bottom, and it's now moving sideways to higher. And that's exactly how this is going to go. Even though the markets were down today, well, that's just a part of the sideways trade. You're going to get a lot of volatility, and that's what we want. With this fund, TNA has set a bottom. We're going to talk about that bottom when I show you this in the money covered call. So, hey, look, if you like to generate cash flow to buy a dividend paying stock, because that's what we primarily do here. We sell premium, right covered call, sell cash secure puts. We take that money and buy a dividend paying stock. We go from the trade idea to the wealth idea real quick, because now we're generating both income with a semi-passive investment strategy with a passive investment strategy. I'm going to show you exactly what we did today with this money. So look, if you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. We are talking about this trade we sent out to the members today. This is a nice little crumb, right? We bought 1,000 shares, and we then wrote an in-the-money covered call. It's going to profit us about $560 or 2.47% in 9 days. Now, those 9 days include this Friday, Saturday, Sunday, for which the markets are not open. So that's actually less, right? That's a 6-day trade making 2.4%. Why? Because it's TNA. It's a 3x leverage ETF to the Russell 2000. We love using index-based trades because when the market is absolutely kicked in the nads like it has been, well, the one thing we do know is that the indexes will come back. I don't know about your favorite stock, but we know the indexes will come back. That's why we trade UPRO, TNA, TQs. The list goes on. We can generate really good premiums using an index. Hey, look, that's what we do. We've been doing it for years. So here is that trade, and I'm going to show you a breakdown of this trade, but I just want to show you what the members get. The members get this every single time I do a trade. Check this out. This is all of the trades in April alone. Yeah, we did over 350 trades last year. In fact, it may have been more. That's what I do. I'm a trader. I'm in retirement. I retired at 55. I have a bankroll. We trade that bankroll to make money. We make money and then we buy a dividend paying stock. I sell premium. I'm not a buy and hold investor. I buy TNA to write a covered call against it. That's what I do. And what I do is show the members trades like this. If you wanted to take on this trade today, you could have, because as soon as I complete the trade and post it in both the phone app, email, and blog post that only members see, you could have done this exact trade. And this is what I love to do, show the members how we can generate cash flow using covered call writing, and then we buy a dividend paying stock. We have been buying QDTE, XDTE, RDTE, all these wonderful ETFs that will track the indexes to generate their dividend. I don't have to worry about some single stock risk when it comes to dividend investing. We're going to use indexes, and that's what I love to do. It's as if every time I do a trade that I'm about to explain to you, I get a pay raise in retirement. Yeah, that's right, because this money right here is going to go to two things. One, it's a profit. Two, I'm going to take 25%. I'm going to pay the tax man with my tax bucket idea. Showed the members that, how we take the taxes and we buy a dividend paying stock, so that is going to pay the bill next year. And we're going to feel good about it because we're buying a dividend paying stock that pays a dividend. It is money on top of money here, and that's what I love to show the members. Now, the other 75% of that profit, we're going to take that and we're going to pay the bills, live the good life knowing the tax man's paid, or we buy a dividend-paying stock. This money right here, when this trade is closed, because I only record trades when they close, we'll take this 75% of this profit, and we're going to buy another dividend-paying stock, probably RDTE. We're using TNA, which is a leveraged ETF to the bull side, on the Russell to buy a dividend-paying stock that pays weekly using the Russell. So let's go ahead and take a look at this trade. I promise I won't bore you. So here's the breakdown. It's just this easy. TNA right now is trading like everything else in the market. It's up and down. It's trading sideways. It's off the bottom. Notice its bottom is 18. It bounced off that 3 times. This is an index, so that index bounced off of that 3 times. And if you look at the S&P or NASDAQ, you'll see that they have their own 3-tap bottom. I believe we move forward from here, and now we're going to move back to the S&P 500, trading right around 5,500 before we can move forward. So once we get there, that'll be a wonderful number. But for me right now, I have money and I want to go ahead and buy 1,000 shares of TNA. So that's exactly what I did. When it was trading at $22.59, I bought 1,000 shares. Now I dialed up an in-the-money covered call. And we're going to talk about the details of what an in-the-money covered call is. Basically, the trade details are bought it at $22.59 per share. We went ahead and gave somebody the right, but not the obligation to take my shares at $20.50. Now you're saying to yourself, you bought it at $22.59, John. You're giving them away at $20.50. How are you making money? Well, look at the premium. I'm getting paid $2.65. That's 2.48% profit, 6 days of trading. Well, again, you're saying, hey, where is the profit if you're selling the shares at $20.50? Well, look at the breakdown. When we collect that premium of $2.65 per share, $2.09 is intrinsic value. It's the difference between where I bought them and where I'm giving them away. So I make no money on that because I bought them at $22.59 and I'm giving them away at $20.50. Well, the call buyer doesn't make any money because even though it's trading at $22.59, he paid me $2.09 for that right to buy my shares at $20.50. Now, what is left? What's the money on the table? 56 cents. And when you bought 1,000 shares like I did, that's $560. Because if the premium profit, right, you have intrinsic value and time value. That's what makes up an option price. In this case, for the $20.50 strike, when the stock's trading at $22.59, the premium price, the option price was $2.65. $2.09 represent intrinsic value, the difference between $22.59 and $20.50. What's left? 56 cents. That is my profit. That is the premium. Now, that is the profit because I'm going to be holding these shares until next Friday. So I get paid for time. He's paying for time. We get paid for time. I love how we get paid for time. When you understand that concept, for which we are buying and selling time, you'll truly understand the selling premium trading strategy is incredible and it's incredibly profitable. So there's your setup, and notice that I do not lose money until the stock gets to $20.49. I'm going to explain that here in a minute because remember, this person paid me $2.09 in intrinsic value. The stock can fall from $22.59 all the way down to $20.50 and I lose nothing. Now the question is, do they take my shares at 2050 or does it fall below that, for which that person's not obligated to take my shares at 2050? They didn't buy the right to take my shares at 2050. So we want the shares to stay above 2050. And we really don't mind if it goes higher from here, because we collected our 56 cents in premium, 2.48% for this next 6 days. See, we get paid for time, and the time is holding these shares until next week. Now, let's talk about this trade. This is why you're watching this video. This is one of the more confusing covered call strategies. People just don't connect the dots between buying it higher, selling it lower, and you're wondering how you make money. Well, I hope already in this video you understand. I mentioned it 3 times, but let's do the breakdown here. I am buying these shares. I bought 1,000 of them at $22.59, and I'm giving somebody the right, but not the obligation to take them at $20.50. And right there, I'm losing money. So I better collect in the premium that difference between where I bought them and where I'm giving them. Well, I actually am giving that, because you can see the intrinsic value in this option is $2.09. Nobody makes money on that, but now my true cost basis is not $22.59, is it? It's not, because when he pays me this $2.65, well, he pays me the difference between $22.59 and $20.50. So no matter where this trade goes, if I end up holding my shares, the next trade, my cost basis is $20.50. I hope you get that concept, because when we write a covered call, if by chance this stock falls below $20.50 and I have to keep these shares come next Friday, then we're going to use $20.50 as our cost basis. And do notice the 56 cents there we talked about already. That is my premium profit. That is the time that I'm getting paid. So 56 times 1,000 is $560. 1 free month offer to my membership. The members get all of this. I give you a 1 free month offer. It's in the description below. Make sure you get yours. We're trading again, and we're absolutely doing trades just like this. Now, the in-the-money cover call strategy has downside protection. A lot of people love this. I do too. Because if TNA were to fall, well, we got $2.09 of downside protection, right? The stock can literally fall from $22.59 down to $20.50, and I haven't lost a nickel. I love this strategy. And you can see the breakdown, but here is your break even and risk protection. Even though I'm selling my shares at $20.50, the $2.65 premium cushions the downside. That is your downside protection. Effective break even for the $22.50 cost basis of my shares, $22.59 where I bought the shares. Well, if you took the entire premium, which we don't do, but if you took the entire premium, my new cost basis would be $19.94. But we don't do that here. We're going to use that 56 cents in premium to pay the bills, live the good life, buy a dividend-paying stock. So the $2.09 in premium offsets a fall in TNA's share price from $22.59 down to $20.50. That is that downside protection a lot of people like. There's your buffer or cushion. Well, the trade doesn't start losing money until it falls to $20.49. I hope you get this, because this is a great strategy right now, because we don't know if stocks are going to go up or down. But you know what? If we know their bottom and feel comfortable that TNA's bottom is 18, here's the magic of this trade. Now, even if TNA were to fall below $20.50, because it's a leveraged ETF, guess what? If come next Friday we have to keep these shares and it falls to $19, I can get off a 30-day covered call with the $20.50 strike, and I'm still making 5% cash on cash. That's what we do around here. Now, before I let you go, you're saying to yourself, John, have you ever done this before? I've seen videos on YouTube where, quite frankly, I'm not even sure they've done the in-the-money covered call. Yes, to say the least. This is just a small fraction of me using TNA last year. In 2024, I used TNA to generate $57,000 in profit. Now, that's premium profit. And we do a lot of buybacks too. Remember, we sell time and we also pay for time. So notice all of these in the money trades. All of these trades, I bought the shares higher, I gave them away lower, and then of course we closed the trade. And if the stock was in the money considerably, we then closed out the trade, sold the shares immediately. This is something I teach to the members all the time. They get emails on this all the time because we sell time. All the time we sell time. I love this. I love this. Look at that. These are the trades that I've done. Look at those. We buy the shares higher, then we sell them lower, but we get paid in that premium. And now looking at the screen, I can see that I added some out of the money strikes. What I want you to notice is we use TNA. Look at all of those green profits. Tell you what, I show the members whether I win, lose, or draw does not matter. I'm trading my own money in retirement, so I keep track of that so I can show the members. Now, hey, look, let me show you one last thing that the members have access to. The expected stock move calculator. This is an incredible tool. You say to yourself, John, how did you come up with that 2050 strike price for that 1 week in the money covered call? We always use the expected stock move calculator. Like, you need to be living in this thing right now because a lot of our positions are underwater and we want to write covered calls where we may or may not have our shares taken away. Well, if you go to the expected stock move calculator, you plug in the expiration date for which you want to do a covered call. You plug in the at the money implied volatility for where it's trading. It's going to give you the upside and downside of an expected move. And you can see right here when we plug in the numbers for this TNA trade, we are talking from 22.59, the expected up move is 24.98. So had I bought the shares at 22.59 and written it out of the money covered call, well, I might have picked the 25 strike. And if I own shares that are underwater and I didn't want to have them go away, well, I might pick that 25 strike. Again, it's an expected stock move calculator. All members get it for free. We live in it. Today, I use the other side of the expected stock move calculator and notice the 19 move. Well, I'm thinking to myself this, in the next week, if it falls to $19 and I have to keep my shares, I'm down like $1.50 on the shares, right? I mean, 20.50 is my new cost basis. It's trading at 19. Well, when we dialed up a 30-day covered call for the 20.50 strike, we're going to collect over 6% in covered call premium using the 20.50 strike, getting out of the trade, 0 on the shares, but we would have made 2 incredible covered call premiums, basically making over 8% in a 5-week window. Hey, look, if any of this interests you, I want you to sign up for my membership. I got a 1 free month offer for you. It's in the description. I would love to welcome you aboard. Hey, look, if you have any questions, ask them in the comments. There's a lot of wonderful people out there right now willing to help you out. But hey, if you want that special attention, become a member because any question you have, I'm going to answer it because you put skin in the game. Hey, look, I'm going to leave it there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.